I am very fortunate that I have Charles Nenner with me today. I have been talking with Charles Nenner for over 15 years, and I want to tell you that Charles, his work, his research, his cycle research, his insights have been deadly accurate. And I'm going to tell you that what we're going to talk about today, because we're going to talk about the war cycle, we're going to talk about the recession, we're going to talk about what's going on in the world, probably the most important interview that you've seen all year. This is going to be terrific. We're going to talk about where we are in the war cycle. And I want to bring on Charles Nenner right now, and let's start this and let's talk. Charles, thank you so very much for coming on. I know this is late where you're at, and you and I have talked about, we were talking about your war cycle 5 years ago, 6 years ago. We talked about that. You made mention of that.
I started already in 2010 already started on Fox Channel to talk about the coming wars.
Well, it gets away from us, doesn't it? It's been a long time. We've been talking about this, but it's here now. So can I ask you, where are we on the cycle itself? So are we increasing? Are we going up? Is there a stronger magnitude of the cycle itself? Can you talk about that?
Yeah, so I don't want to go over the whole situation, how we got to it. But to answer your question, you're going straight up, so things are going to get much worse. And if you listen to the news, it seems very logical that it's going to be much worse, because if the United States allows Ukraine to use their rockets to attack Russia, it's like that you order somebody to kill your wife and you're as guilty as the murderer. So I don't know where the West gets this logic from, that they can do that, but it's not going to end very well. And like we talked before, we're going to have this major pact between China, Russia, North Korea, and Iran. And the West has no chance to survive because they're much stronger than we are, and they're much more motivated. By the time we know if we're going to address a soldier as a he or she or they or who knows what, we're already gone. So the West is just undermining itself, and it's going to be a very bad situation. Most of my clients now, they were busy with it. They all got visas for all kinds of places, Caribbean and further away, just to run away from the war zones.
So speaking of the war zones, does you run charts on like Europe, Germany, Russia as to where the war zones are going to be? Is the United States part of the war zone?
Well, the United States is always part of the war zone, only this time the mainland is going to be attacked. Americans still don't understand that what the Japanese could do, anybody can do these days. And of course, you don't have to plot it. You have the NATO, you have the European countries. We run like what do you call that? A mule without a head. The United States. The United States has no idea what they're dealing with. They have this obsession with Russia, and that's the wrong place. We talked before. It's going to be China and Iran. And if he has stupid remarks like, we learned to live with nuclear North Korea, so we're going to live with a nuclear Iran. The difference is Koreans like to live and Iranians like to die. So that's not the same situation. But they have absolutely no insight of how the world works. Got this situation with who lost a fortune for ships to go now around South Africa. And we cannot even fight the Houthis. So is there anything else I should say? It's just a hopeless situation. So
do you have a time frame when this is going to really start? I mean, it's heating up right now. Worse from here?
Yeah, it can start, like I said, tonight with Hezbollah to start raining rockets. And then if Iran also participates, then I think United States is forced to step in also, and who knows what's going to happen.
And do you have a duration put on this, Charles? Is this going to last for a year or 2 years or 3 months? Or is this a fast?
Well, it goes up and down the next 4, 5, 6 weeks, at least in the Middle East. How do I know that? I look at the stock markets in the Middle East. I look at the currencies in the Middle East, and I see something is cooking, and then probably is a war situation.
And anything people can do for this? Should they start preparing for this?
Well, I don't know exactly how to prepare. I have very big clients who even make a study if the East Coast is going to be attacked, which way the radiation is going to blow and all that stuff. Not very familiar with that. They invite me to come over. They found a safe place. The average American has no clue what's coming. They watch their beer, they watch their soccer game, they watch their football game. In the media, don't say anything. And, soon Can you imagine we're going to be run by Kamala Harris? I'm just speechless. I don't know what to say anymore.
Well, Kamala Harris, have you done our election cycle?
Yeah, but it's ready yet. They still have some time. I'm so tired of this whole thing. So I try not to watch it anymore. It's too depressive what's going on.
Well, it's an amazing part of our life, and you know, for when we talk about the war cycles, I know they never talk about why. You're more concerned with what and when. But the way I look at this, you know, the Western world has brought in all these come into their land. You know, they don't have jobs, they don't have work. You know, they have a support system, they don't have relatives, and they don't understand what's going on. They're kind of dependent on the government, and then economy. Right,
but you know, the good people don't come. They have families and a job. I hear that in South American countries there are no prisoners anymore because they all been to the United States. And I have friends who are afraid after 6 o'clock to walk over a couple blocks in New York City, Manhattan, but they're still going to vote for Democrats. I don't get it, but they're going to suffer. I mean, I don't live in the United States. Let them figure it out.
Well, so let me segue. So we've got a war coming, and you talk about this now. You having a big war. Is this the major one? You talked about at one time 2 billion people that were.
I don't know. That I don't know.
You don't know if this is the big one or not. So, but your cycle is showing more following this one.
Yes, up and down. So I don't know if this is the big one. What I do know is, and I've been writing that to most of the cycles that led to the 1929 crash are lining up for next year. And like I said, it's a yearly cycle. So it could be the beginning of the year, could be end of the year. That I don't know. Also financially, we're in for a huge crash.
So, you know, I've been thinking that we were in recession since last fall, since really the Q4 of 2023. I could see, you and I have been talking about this fact that it's coming. Of course, there's not a point. It's kind of a process. It starts and then slowly, and then it picks up speed. Do you think we're in recession now, Charles?
I think so, but it's always a couple of quarters later you get the numbers. Right. And they're still fooling around with a lot of numbers, so it's very hard. But I think we're in a recession already. But remember, my definition of recession starting was when the yield curve goes back to positive, and that hasn't happened yet.
I think we're awfully close to it inverting back.
Yeah, but it looks, in my cycle work, it looks like bonds are going to sell off again. With 100% defensive on stocks, and now we're going to be 100% defensive on U.S. bonds also. It looks like the dollar is going to not perform well. What is going on?
So if bonds are at risk, does that mean the interest rates are going to go up?
Yeah, then long interest rates are going up. My inflation cycle bottoms in a couple of weeks again. So now it looks okay, but it's going to pick up again. Crude oil is going to pick up again. Natural gas is going to pick up again. The grains is going to pick up again. And I don't know how they solve it. If they ask Kamala Harris what you're going to do about it, she doesn't say one word what she's going to do about it. And the craziest thing is, so why are you not doing it now? Why do you have to wait until you're president? What did you do the last 3 years? It's just an amazing situation that would not exist in Europe.
So we're talking about a war cycle. We're talking about interest rates going up. So what do you think is going to happen tomorrow with the Federal Reserve? Are we still looking at a quarter point to half a point?
Yeah, I think we're looking at a quarter of a point.
And that's tomorrow. But you think long-term rates are going to start coming up? Not quite. When do you see that happening, Charles? What are your charts saying that's going to start?
My chart says that already the bonds could sell off.
Really?
Yeah. So maybe they're going to be disappointed tomorrow, but what the Fed's going to say.
So let me ask you: do your charts show that it's a sell-off and a long-term sell-off, or just an event?
But we had this cycle. I don't know. We once showed it on your program. Interest rates are going up for the next 30 years.
Yes, we've talked about that. Correct.
Yeah.
Yeah, we talked about that. And this would, you know, I know you do why. You know, you never like to do why. But if we have a war,
I can reason why. One of the reasons is that China has a lot of our U.S. bonds.
Correct. And
they really want to hurt us. They sell the bonds, and then the rest of the market follows. And when the bonds tank, interest rates go through the roof. That's a simple reason.
And of course, if you were China and you had the U.S. was punishing you and maybe you had the threat that maybe we wouldn't let you redeem the bonds. And we've been putting these, what do you call it, on our trading. They're less likely to trade with us. So if we have a bond problem and a war problem, both of those are highly inflationary, are they not?
I think so.
So they're kind of go right with your war cycle. Because you showed me your cycles before, and it looked like there was at least 3 waves, and that third wave was coming, and it was worse than the first and second. Was that correct?
Right. We said more cycles are bottoming in the middle of 2023, and that's exactly what happened.
Yeah. So I want people to really take a look at your research. I mean, I'm an older guy now, so I'm going to say I think we're probably one of those periods of our lives that there's a lot of risk. A lot of jeopardy.
Yeah, but you know what was interesting? I got one of the best anti-indicators, because if we don't have a big influx of new clients, they don't need us. It means everybody thinks the market goes up, they can do it by themselves. So that gives me an idea that we're having a major top over here.
Well, you still offer 30 days free, do you not, to take a look at your research?
Yeah, no credit card, nothing needed. You can just look for 30 days what we do and how we do it.
I think that everybody is watching this should really just take advantage of this time of year. Not to make a commercial for you, Charles. I've looked at your 10 years. I'm just amazed at how your forecasts just turn out. I mean, if you say something and you see it on your charts, odds are that's going to happen. And if you know what's going to happen, you don't necessarily need to know why. You just need to know that this is happening, and you give us a time. I think everybody that's watching this should really. It's charlesnenner.com, right? They just go to charlesnenner.com and get a 30-day free trial.
I always have an idea why I don't consider myself to be why it happens. I don't know if anybody knows why things happen. I just remind you that 3 weeks before the virus started, the coronavirus, we're in 100% cash, because it said the market goes 40% down, and it went 40% down. And only later did we find out it was because of the virus. But it needs a change in how you approach reality, and that's very difficult for people.
Charles, you and I did that interview together, and it was 3 weeks before the virus, and you kept saying, I don't know why, but my charts are saying this, and it looks like, I think you said 38% employment, and you're saying, how is this even possible? And another 3 or 4 or 5 weeks ago, we shut the world down. It was the most amazing call I've ever seen in my life. It was just unbelievable. Well, let me segue back to that. We think recession, we're starting now. We're kind of in it. It's going to get worse here. Right. What kind of time frame do you have, Charles, as to what this is going to do?
Well, listen, if I'm right about the cycles lining up like 1929, you can imagine what we can expect, because if financial assets are being destroyed, you have a major crisis on your hand.
You call that deflation?
Well, it could be anything. Like you said, we're not interested in what it is. Could be hyperinflation also. I don't know what's going to be. Like in Germany in the 30s, there was hyperinflation. Who knows what's going to lead to it? What's going to lead to it is the balance you're going to pay, I don't know how much interest on outstanding loans. And we all both know that it cannot continue like that. And they just try, continue. Every leader says, okay, I know it's a problem, but not while I'm in charge. Going to accuse me of making that problem. And it's getting worse and worse and worse. And this is how empires go. It's always the same story.
Several causes that could be this. So wars are highly inflationary. And you alluded to the fact that the U.S. dollar might be going down. And of course, everything is expressed in U.S. dollars. If the U.S. dollar loses its strength, I think we're at 102 on the DXY, but we could easily go down to the DXY. That'd be a 25% drop. That would be a huge inflationary event if the U.S. dollar started going down. Would you agree?
Well, we have a reason. We've got this expanding, and that GDP is already bigger than the United States. And the United States continues to tell the whole world how they can function in a financial system. I give you one example. I have a friend who was born as a baby in the United States, who came to the Netherlands when he was 1.5 years old, and he cannot open the bank account because he was born in the United States. So that's why these BRIC countries, other countries, just had enough, and they're going to leave the dollar. It's not going to happen immediately. It's another thing that is unstoppable. And that's usually, I think we once talked about it. I'm Dutch. The Dutch used to rule the world. And then the same thing happened. And then The Spanish and Portuguese, same thing happened. Then the English were waves, and now it was the United States, and that time is finished because they make the same mistakes that all the other empires made, and they're going under.
Well, so we've got a war cycle. We've got a recession that you say is going to look maybe could look like 1929 again.
The crash, yeah, and then what happens after that?
Do we have a time frame on that?
Like I said, it's next year, but since it's the whole year, so I have to work quarterly, monthly cycles. When we get closer to it, then I can pinpoint it. But for now, it's a yearly cycle that points to 2025.
Well, this is 2024 in September, so this is a fairly imminent thing. So you gave me some great advice long about the U.S. Real estate market. You said they should maybe take some proxies like Lennar and Tolbert and short the stuff. Do you think that would be good advice for people today? So maybe they should start putting some allocation.
Not everybody has a stomach to short, so it says buy some long-term puts whenever we give the signal.
Which is another reason they start getting your research, Charles.
Yeah, I remember I had puts on Lennar, and I don't know what, I forgot the strike price, but Lennar went as $2.50 in 2008-9. So I have any idea, you know, what you can do. And then, okay, you make up for what you're going to lose in your home. And you don't have to worry about the home prices going down.
So there's things people can do.
Yeah,
and so they just need to pay attention. You do this. I've seen, you know, your research is impeccable, and you give items. So interest rates coming up, maybe starting this week, if we've got a bond problem. Yeah. Do we have been able to quantify how high you think they're going to go, Charles?
No, because I have so much to do. I'll give you an example. We buy for big companies. We buy live cattle. People whose hamburgers have to know when to buy live cattle. For chocolate firms, we have to know what the cocoa price is going to do. We have to know what soybeans is going to do. It's a whole enterprise supporting all these firms, and we're always running out of time. So soon I have more information.
Another reason to take your research. So you and I have talked about the recession going into 2026, 2027. So this is going to be a fairly long recession. Is that what your charts are showing?
Yes. Going to be a very bad situation.
Wow. So if we've got inflation going on, we've got higher interest going on, which goes hand in hand with that. We've got dollar coming down. We have a war cycle. Looks like we've got a tremendous amount of turmoil coming at us. Any signs where people could park some money? Gold? I know we talked about gold going to $2,500. We've made
it went to $2,500.
Good. Yep.
And we sold, and soon cycles bottom again, and we're going to take a new position. Still, it doesn't look that amazing as you should expect that it does. It's okay as a hedge, but it's not a major. Still, I see the try to explain is that the insiders are selling, and when it stops selling, there is bounce, and all the small investors buy again. So we can say whatever they want, but they continue to buy. And we had this discussion before the big top in bonds. When was that? 20 years ago, 15 years ago? I said, people know a bull market in bonds in 40 years. They don't even realize that it doesn't continue like this forever. And it's the same thing with the stock market. But they have no clue, or they have no tools to decide if it's a top or not a top, if it's overvalued, if the recession is going to bring the corporate profits down. The insiders know. And when they sell, you see a market coming down like it last time. We know we went out of Microsoft and NVIDIA and Google and all that stuff. And then they think, oh, it goes too fast. They stop selling. And here comes a small investor and he bids it up again. And here they sell again a couple of million shares until they finish selling. And then the whole thing comes down.
So what's the advice, Charles, is that maybe they should start paring out of their equities positions and start going to cash?
I think so. We hedge always with the VIX, as you know, the volatility and the volatility. Now, I'll give you an example. It's much better shorting futures S&Ps. We bought when was the last downturn? 6 weeks ago at 12.5, and it went up as high as 61. Can you imagine?
Wow!
So you just have to, if we time it correctly, you just have to invest a couple of $1,000, and you're all set.
That's amazing. Well, that's what happens in volatility. So that there's all kinds of trading opportunities to do that. A lot of the mainstream they're going to talk about, they're going to have their life savings in their 401ks and in their IRAs. Where would be a safe place to park? Do you think if they parked into short term, they'd be okay?
Yes, that's the best thing. If you don't follow our research, if you don't want to do anything, maybe that's the best thing to do.
Well, I'm going to again tell everyone that they should at least, I mean, it's a free 30-day trial to take a look at your research. With all the volatility and turbulence that's going on, they just themselves a disservice not to do this. Charles, is there anything else that you want to talk about? We talk about the war. We talk about interest rates going up. We talk about inflation starting shortly. Bond market having a problem. We got a recession coming that's going to become one of the worst recessions we've ever had. It's going to last until 2026, 2027, right?
Maybe longer, maybe longer.
Maybe longer. Wow. So this is really a time that you really need to be careful. How about in my business? Do you see any turbulence in the housing industry or in the real estate industry? We've had
because what's going to happen now is, I don't talk about Harris giving $20,000 for new buyers if she does that, but at the same second, the housing price is up $20,000 because everybody says, "Oh, we included $20,000." The problem is if we get a little lower short-term rates, like the Fed, and long-term rates are not always in sync, more people are going to buy houses they cannot afford, which will bring the crash even more seriously down than it's now in the housing market.
So how do you think housing is going to do with inflation? If we've got inflation, houses are generally a pretty good inflation hedge.
Well, but if you look what happens in the 30s, in the inflationary period, first, you lost your shirt.
Yes,
you have to really be a study of financial history, but very dangerous. The best thing at home, look when we give a signal to buy some puts on Toll Brothers or Lennar, puts that go for a year, for 2 years, you spend a couple of $1,000s and you're safe.
Yeah, because in my little work, I've been following you, and I look at housing as a cyclical as well, and it looks like we're very fully valued, and it's going down, and probably going to be down for 3 or 4 years, and then they probably will come up with inflation just like the normal cycle does, but could be extended. I mean, no one says these cycles have to do exactly what they did last time, but they're pretty close. So there's it's kind of a balancing act. They're too high now. Prices are going to come down. We should buy there might be a time frame to get in prior to the inflationary when rates are still down. Would that be a good time to get?
There's something called, and I didn't make that up, Professor Schumpeter and other experts made it up, called the super cycle. And the super cycle is finished, which means the whole thing is now down with some little bounces up. It's not the other way around, that everything is up with some bounces down. This is a major, major situation for many, many years. Wow.
So if you're going to be in most of these asset classes, financing is probably going to be a problem for you. You have to be very, very careful. Imagine very low leverage on a lot of properties, but very small mortgages. If you can go cash, I think you'd a whole lot better so you don't have problems.
Well, the insiders are doing well. And like I said, we're not asking for anything, but just watch how we're doing. At least you know how insiders do. You get a taste for free. You don't want to become an insider. Then continue to listen to the media and try to make some money listening to the television, radio. I just offer it for nothing to show what really is going on in financial markets.
Well, Charles, you've been a friend and a great help for a lot of people for a lot of years. Is there anything else to add before we finish this up?
Not really, but take this coming period very seriously.
Really seriously. It's like one of the most jeopardizing periods of my lifetime. And I think people should be very, very concerned that they're running. Well, Charles, I'm going to thank you very, very much. Take care of yourself, and you think we're going to see some things happen tonight. Let's do this again. Can we do this again and see where we're at in a month or two?
Yeah, we'll do it. If you see something major happen, then contact me and we'll do it then.
We might be contacting each other a lot because I think a lot of things are going to be happening here very shortly. Well, Charles, very much for coming on. And I'm sure everybody that's watching this is going to be very, very grateful that you've done this. Thank you once again. My very best to you.
Thank you.
Bye-bye.
Bye.